Right. Perfect. So good evening. Today I'm going to teach you about discounted cash flow analysis of one company we are going to take, and the format I have prepared. You can take the same format for your calculations, and based on this format we have to put just the numbers. Okay, I'm going to share this format also, and we are going to calculate the DCF model. We are going to apply the DCF model of, let's imagine, I'm going to take company called Apple, right? So Apple company stock I'm going to use for DCF analysis. Okay, so let us start with this. So first thing is, this is a format which I want to introduce to you. Company name we need, what are the information we need, growth rate, perpetual growth rate, discount rate, which is called as weighted average cost of capital. And this is a model which I'm going to prepare here, that is year, and we have presently 2021 data is available. So I'm going to calculate the future cash flows for the next 5 years. Okay, 2022, 2023, 2024, 2025, 26. So future cash flow as well as terminal value as well as total value. And how are you going to calculate WACC? There is a separate calculation is there. So to calculate WACC, we need to first calculate cost of debt, very important. And then we need to calculate cost of equity. And then we need to calculate what are the weights of debt and equity. So these are the assumptions as well as these are the calculations we need. So once we get to know what is weight of equity and debt, then we can calculate easily the WACC, which is nothing but cost of capital, weighted average cost of capital. So what the formula is KD WD plus KWE. Next, once we get to know the WACC, so I need WACC, very important. And then finally, I can use this WACC to calculate the present value, nothing but at a discounted cash flows of each values. And then based on that, I can calculate whether we should buy the shares or not. And these are the final calculation. This is my final calculation to check whether the share is overvalued or undervalued. Based on the information, I'm going to check whether we should buy or we should sell. So that is the final decision we have to take. So here is the enterprise value, cash and marketable securities we have to add, minus debt, then you will get equity value, then share outstanding, intrinsic value, current price, upside. I'm going to tell you what is that. Okay. So let us start one by one information to be filling up. First, I'm going to write the company name, Apple. You can take any company, your own company, which you have already selected. Next one is the growth rate. Okay. So this is the growth rate of FCFF. Okay. FCF, future cash flows. So please understand, growth rate of future cash flows. I am going to use one website over here, that is yahoofinance.com, where I'm going to take all the information from yahoofinance.com. So carefully everyone observe here how I'm going to take the growth rate of FCF. Go to the Google and just type your Apple company. So you can get your Apple. Okay. So now this is the Apple company's data. So I need growth rate of FCFF. Okay. The first information is growth rate of FCFF. So where do we get? Just go to financial. Okay. And in the financial, can you see there is an income statement, balance sheet and cash flow? Just go to cash flow. Okay. And just go down. Okay. Now you can find there is something called free cash flows. Okay. So we have free cash flows is given here, right? So let us see, let's expand. The total free cash flows over the companies, we need to take that information. So now what we'll do, we got a free cash flow of 92,953 and some zeros. So this amount I am going to take it here. Okay. So what I will do here, just let us take this, because if you see here, there is a TTM is there. Please don't take it. The latest data you have to take always. That is 2021's available data, right? So whatever the data it is available for 2021, that you have to take as your free cash flows. Okay. Next, and few information. If you go to analysis, there are some information also you will get here. Okay. So now the growth rate estimates. I need growth rate of FCFF, free cash flows. Free cash flows for first year 2021, I got it there. But I need information of growth rate of FCFF. So what you have to do after that, after financial analysis, in financial analysis, in cash flows, if you go down, you will get the free cash flows, but I need the rate. So you have to go to the analysis, the next one, just go down, scroll down. Okay. You can see there is something called as next 5 years. Okay. Estimates growth rate of these companies around 15.68. Okay. So this is my growth rate of the FCF. So 15 point, what is the rate? 68. Okay. 15.68. Sorry. So we got the growth rate of FCFF, right? Now we can at the same time, we can write FCFF also, free cash flow. Go to the Yahoo Finance and go to where we'll go. We'll go to financial, and before that, just go to cash flow, and in the cash flow you can find there is a free cash flow, that is 92,953. We'll copy this number 92,000. I'll just make a note of this 92,953,000. So let us write now this number 92,953,000. So this is a cash flow, free cash flow of 2021. Okay. Now, next, what else I need? I need perpetual growth rate. Remember, perpetual growth rate is one kind of assumption. Okay. Whenever you're taking perpetual growth rate, it cannot be the growth rate like 15.6. What is perpetual growth rate? Once a company reach to the one stable, or we can say maturity, or at a peak stage, the growth rate will be very low, right? It becomes like a constant kind of growth rate, but that growth rate cannot be more than the any GDP of the country. So since Apple is belong to the US country, so the Apple growth rate, perpetual growth rate cannot be more than US economy. So what I will do, I will take here one assumption. Okay, you also can take assumption between 2.5 to 5. So I'm going to take your assumptions of 2.5. So my growth rate is how much? 2.5. Based on this, I need to calculate. Okay, it is a purely assumption based. And remember, this cannot be more than the any GDP of the country. Means a stock or a company cannot be have more than the growth of the economy. That is the meaning of this one. So you take the assumption 2.5 to 5 in between. Now, very important is the WACC. Okay. So what is WACC here? Weighted average cost of capital. So that is very important. We need to calculate. So I have prepared their format to calculate the WACC. So remember, all the data you should take for 2021. Okay. For 2021, we have to take the data. Based on that, we are calculating the future cash flows for the next 5 years. So when you are preparing DCF of your company, same 5 years only you have to take it. Okay. So first is the interest expenses. Very important. So first I need to know what is the interest expenses. So what I will go to again Yahoo Finance. Where do I get interest expenses? Go to income statement and just click on expand. Can you see interest expenses? Okay. Please make sure you're not going to select TTM. You're going to take 2021 because this is the data which I need. So here we can see the interest expenses, which is non-operating. This particular item you have to take interest expenses non-operating. So what is the amount of interest expenses? It is 2,645,000. So let me write down here. The interest expenses is 2,645,000. This is the total interest expenses. And next, I need some information on short-term debt. So let us go to the down. Short-term debt is nothing but always called as current debt. So where do we get short-term debt? It will go to the balance sheet. Okay, you can find there is a called as debt. Okay, so here there is a current debt. You can see here. You can find there is a current debt. So the current debt value is 13,769. Okay, so short-term debt is how much? 13,769,000. So I'm going to take this as my current value. So just go and write down in your Excel sheet 13,769,000. This is my short-term debt. Okay. Next is I need a long-term debt. Once again, I will go to there and you can find there is a long-term debt. Okay. And remember, you are going to take this value particular 2021. Okay. So current debt is for, okay, it is 15,161,3. Sorry, it is 15,613. So 15,613,000. So current debt value is 15. Okay, it will change here. It will become 15,613,000. This is a value. And long-term debt, I need to calculate now. Let us go to the long-term debt. Down, long-term debt, you can find here 109. Let me write down here 109,106,000. Okay, so let me write down the long-term debt 109. Whole number you have to write down 109,106,000. Okay, so if we add the long-term debt and short-term debt, the total value is, this is the total value of short-term debt and long-term debt. Once again, I will tell you people where you get this information. You have to take 2021 data. Okay, the latest data. Under this, you will get current debt as well as, just go down below, you will get long-term debt. Both you should add, then you will get something called the total debt. Okay. Now, next very important information is you need to calculate what is the cost of debt. So what is cost of debt? Cost of debt is nothing but the interest expenses what we are paying, right, divided by the total debt. Okay, so let us assume that this is the interest expenses. Okay, divided by, on this total expenses I am paying the 2.212% is my cost of debt. So how did you get 2.12? I will show you the calculation. Interest expenses divided by total debt. Okay, that is your cost of debt. So now we got cost of debt also. Now next what we need to do, we need to calculate income tax expenses. Okay, so where do we get income tax expenses? Just go down. Okay, and you will find there is a income tax provisions will be given in the question. Just go down. Liabilities, tax provisions. Go to income statement and there you will find the tax provision. Okay, but remember here when you are taking in income statement, don't take TTM, you have to take 2021 data. So here there is a tax provision of 14. Let me write down here 14,527,000. So I will write down income tax expenses 14,527,000. I need next information is income before tax. Okay, so income before tax is pre-tax income, which is called as income before tax. And income before tax is how much? 109,207,000. Okay, so pre-tax income is there, which is given 109,207,000. So this is income before tax. So what will be my effective tax rate? How do we calculate effective tax rate? Income tax expenses divided by income before tax, whatever is there. It means on an average, I'm paying 13% tax. This is what we got, the effective tax rate. Okay. So next, once you get effective tax rate, we have to calculate now cost of debt. So now how do we calculate cost of debt? Already we have cost of debt, but this is pre-tax. We have to calculate 1 minus T. So sorry. So how do we take now cost of debt? We have 2.12. Theoretically, if we want to calculate here, it will be 2.12 bracket 1 minus, what is the tax? 13%. So 0.13. If you take this calculation, so 1 minus, okay, is equal to, take this one, 2.12 minus 1 minus 13% is the total effective tax rate. It's calculation. Okay.
So instead of 13%, you can take 0.13.
So cost of debt we got, I just took a multiplication here. You have to press is equal to B5 into 1 minus T. Okay. So what is the value you will get? Cost of debt is how much? 1.8. So we got cost of debt. KD we got now 1.8%. Now let us go down. Okay. Now we have cost of equity calculation. First, we have to calculate risk-free rate. And remember, risk-free rate is nothing but the treasury rate. So how do we calculate? Go to the Yahoo Finance and go to here in the market section. Okay. So we have in the top, after cryptocurrency, there is something called as market section. Okay. So just go to their market section and you can find there is a US Treasury bonds rate. Just click on this one. Okay, so now you can see here the US Treasury bond rate. Take for the 10 years. If you take for the 10 years, it will be how much? 1.772. So I got risk-free rate is how much? 1.772. So 1.77. So I will just take 0.2 decimals. So I got a risk-free rate also of 1.77. Okay. Now I need beta of Apple company stock. Okay. So how do we get beta? Just go back to your company and just go to the statistics. Okay. Go to the statistics and you will find beta of your company. Okay. Beta of stock. Yeah. You can see here the beta is how much? 1.20. On an average, this is the beta of Apple company. It is highly volatile, 1.20. So I will write down here the beta is 1.2. Next is market return. Remember, I'm calculating cost of equity with the help of CAPM formula. So if you see, all this information is related to CAPM model. Next is market return. Okay, very important. Now, what is market return? Market return is nothing but the US stock returns. How much it has been given over 1 year period of time. Okay, so NY NYSE, New York Stock Exchange. This is a listed stock exchange. Now, for example, now the question is, you are all taking Indian companies. So what will be your market return? You have to take BSE's or NSE's data, right? For the past 1 year, take the market return of that particular company, and then you will get to know what is the total market return. Since I am taking Apple company, which is listed in NYSE, you take your BSE, okay? BSE 1 year data from what was the closing,
The,
what was the opening. Yes.
the risk-free rate, sir, that also you have taken
Risk.
US Treasury bill.
Yeah. In
So for
Indian
Indian market,
context, yes, in Indian context, you can take risk-free rate of RBI's treasury bill rate. So on an average, RBI treasury bill rate is how much? Somewhere you can say 3.8 to 4%. You can take it. Okay. Treasury bill rate in India around, you can say 4.25. This will be in your RF value in case of Indian market. Okay. On an average, this will be the Indian your market. If you're taking
on an average 4% we can
4%. Now let us take the market return. Okay. So go to the Yahoo Finance and you can see NYSE. Go to the historical data. So past 1 year market return, let us see how much it has given. Already it is the prices. Here you have to select from the 1 year. Okay. Click historical price daily. Just apply it. You will get the historical price. Now, 1 year before, okay, what was the price of NYSE index? Just scroll down. You will get to know the total price. Okay, you always take the closing price. So just scroll up and you check which is the closing price among this. So this is open close. Okay, so this is the closing price. So now today's closing price is 17,000. Okay, 17,219.06. This is the closing price. What was the opening price? Just scroll down. 14,987.34. So let us calculate market return. Okay. What is the, let me write here, close and open. What is the close price? 17,219.06 is the closing price. And when it started, opening price was 14,987.34. So you know, right? Current price is this one. Current price divided by opening price minus 1. So 14. Okay. So on an average, if you look at 15% is the market which is given the returns. So NYSE market return is how much? 15%. So all the information we got here. Now based on this, we can calculate now cost of equity. So how do we calculate cost of equity? Very simple. You have to use the formula of CAPM model. So how do we calculate? So let us start now. Price is equal to double open bracket. What is the RF value? 1.77 plus beta. Select the beta. Multiply with, again, bracket open. RM. This is the market return minus. Once again, I need to take RF value. So cost of equity is how much? 17.64. So I got cost of equity of total how much? 17.64. This is the total cost of equity. So we got cost of debt also. We got cost of equity. Now let us take the weight of debt and equity. So now you can see first parameter to calculate weight of debt, we need total debt, right? What is the total debt? This is my total debt, short-term debt and long-term debt. I'll just copy and I will paste here, total debt. Right? So this is my total debt value. Now, what I'm going to do is now I need to take what is the equity value. So when we say equity value, you need to calculate the total value of equity, right? So how do we calculate the equity value? Just go to your back to your Yahoo Finance and just type once again your company, Apple Incorporation. Go to financial analysis. Okay. Go to balance sheet. Click on expand all. Yeah. So when we are taking here, we have to take 2021 equity. So the total stockholders equity is how much? 63. Let me write down here. 63090 and then 000. This is the value you have to take in case of equity. Go down and write down here 63090 again 4 times. So this is the total value. Okay. Now let us calculate total capital. So what is total capital? Debt plus equity. This one. So this is the total capital of Apple stock, Apple company. So now you will be wondering how this value came 0.66 and 0.34. This is a weight. So how do we calculate? I will show you this calculation. Total debt is this much divided by total capital. This is nothing but 0.66. And how do we get the 0.34? Total equity capital divided by total capital. So final answer is this much. 0.66 is the debt weight of debt and 0.34 is the weight of equity. So I hope we got all the information. We got cost of debt also. We got cost of equity also. We got weight of each individual debt and equity also. Now let us calculate WACC. So how do we calculate WACC? As we know, we have to put the formula here. What is the cost of debt? KD 1.8. So 1.8, we have to write in the formula 1.8 into weight of debt is 0.66. This is the value. Then plus what is the cost of equity? 17.64. 17.64 into what is the weight of equity? It is 0.34. 0.34. So now let us calculate one by one. If you calculate 1.8 into 0.66, you will get 1.24. 1.24 plus, if you take 17.65 into 0.34, you will get somewhere 6. So 1.24 plus 6 is how much? Total cost of capital is 7.24%. So the WACC of Apple company is 7.24. So I hope everyone understood this calculation. Okay. Now let us go to our main Excel part where we need discount rate, and we got total how much? What was the WACC? 7.24%. Now we got all the information what we needed. Okay. Now let us calculate one by one the future cash flows for these companies. Okay. So how do we calculate future cash flows of this company? So 2022, I need to calculate what is the cash flow. So all of it, listen carefully. How do we calculate? This is equal to, take the cash flows of 2021, okay, multiply, bracket open, 1 plus G. Okay, now what are you going to take? The growth rate, okay, of FCFF, right? So now the growth rate of FCFF is nothing but how much it is. It will be growing at a rate of every year 15.68. Just close the bracket and we can lock this one. Okay, we'll just lock this particular cell. Okay, now how do we lock? Just put a dollar sign. So this is the cash flows for the next year. What you have to do once you get this calculation, let me show you once again. You can see your formula. C7 is your 2021's cash flows into 1 plus the growth rate of cash flow will be 15.68, and then lock that 15.68. It is a constant growth rate, right? And then just drag till your 2006. These are my total cash flows for this company for next 5 years. Now what do we need to do? We need to calculate the total terminal value. Okay. So how do we calculate terminal value? Last year cash flows, 2026 year's cash flow, just multiply, okay, bracket open, 1 plus. Now terminal value means the company is having a stable growth rate now. What is the growth rate now? Perpetual growth rate of the company is 2.50. So just select 2.50. Okay. Bracket close. Again, divide. We know the formula, how to calculate terminal value. Divide by WACC minus G. What is the WACC? 7.24 minus, what is the growth rate of this company? Is 2.54. Just close the bracket. We'll get the terminal value. So this is the terminal value of this company. Okay. Now let us calculate the total value of this company. How do we calculate? The last year cash flow 2026. Take that one plus the terminal value. So this is the total cash flows, free cash flows of Apple stock in the year 2026. So we got 2026 cash flow. Now just come back here. Okay, I will show you what is this enterprise value. Once you get this table, now you have to calculate now this particular table here. What is enterprise value? Enterprise value is nothing but how to calculate. All of you concentrate. NPV, net present value. Bracket open. Rate. Because I want to calculate, this is the total value after 5 years of Apple stock. What is the today's value? So net present value of Apple stock today is how much? That is nothing but the enterprise value. So NPV will tell you the total present value of future cash flows. What is it asking? Rate. Rate is nothing but discount rate. Okay. Comma. It asking value 1, value 2, value 3. All these values are nothing but you should take the value for 2022 till 2026. So this is the enterprise value of Apple stock. How do we calculate, friends? Just calculate is equal to NPV. Okay, you can see here NPV bracket open from 2022 till 2026. Just select this one. First, before that, you have to take the rate. The rate is nothing but the WACC. You need to discount it at a present value, right? So take the WACC rate 7.24. Then comma, then take all the cash flows from 2022 till 2026 and then close the bracket. That is the value of today's enterprise value. Then we need cash and marketable securities. Okay, I think there is a spelling mistake. Cash and marketable securities. So how do we get cash and marketable securities? What you need to do, just go to our Yahoo Finance, go to financial, and in the financial you can see there is something called cash and cash equivalent. Okay, so what is the cash and cash equivalent of these companies? Is nothing but how much? 3494. Let me write down here. 34,940,000. So just take this value, the cash and cash equivalent. So 34,940 and 4 times 0. This is the cash and cash equivalent and marketable securities. I need debt. So as you know, we have debt already here. You can see here short-term and long-term debt. Total debt we have to take. Just what you do, you copy this one and take it here and paste it as a values. So we have debt also we got. So marketable securities we should add. Cash and marketable securities we have to add, and debt we need to minus. Then what do you get? You get equity value. So how to calculate now equity value? Take enterprise value plus, okay, marketable securities take, and then minus your debt value, you will get equity value. So this is my equity value of this company. So now we got equity value of this, right? We need shares outstanding. So what we need to do now, shares outstanding, what we do, okay, we have something called as equity capital, right? Total equity capital we have, right? Which is nothing but how much? 63,009, 4 times zeros. Okay. What we'll do, we'll have to know what is the number of shares outstanding. For that, when very important information I need, what is the book value per share? Okay. Total equity capital divided by book value per share, you will get number of shares which are outstanding. Go to the analysis, go to once again your Yahoo Finance, go to analysis, just scroll down and you should get something called as book value. Okay, go to statistics. Let us find out where is book value. Yeah, here somewhere you will find here book value per share. It is 3.84 is the book value per share of Apple stock. Okay, so now we got book value per share. Okay, so let me write down here book value per share is nothing but how much? Let me write down book value per share is 3.84. And what is the share capital? We have a total share capital of 6309. Okay, let me write down this one as here. 6309. Okay, so let us calculate what is the number of shares. So somewhere these are the number of shares. What I will do, I'll just copy and I'll paste it here. Okay. So these are the shares outstanding of this company, Apple. Now what we need to do, calculate the intrinsic value. So how do we calculate? In equity value divided by total outstanding share. It is somewhere around how much? 30.2463 and all. It is coming somewhere odd numbers over here. So now we got the intrinsic value, and let us go and find out what is the current price. Okay, just go to once again of your companies, Apple, go to Yahoo Finance, and you will find the current prices of these companies shares. Okay, so what is the current price of this company is 173.07. So this is my current price, 173.07. So now what we got, the current price is 173 and intrinsic value as per the calculation, it is coming around 30.2462. Now, what is this upside? Okay, the upside is nothing but how much percentage it is increased or decreased. So how should you calculate? Intrinsic value divided by current price minus 1. So there is a less falls of 83% in intrinsic value than the market price. So now based on this, what we need to do now, we have to take the decisions. We should buy or not. Okay, now here let me write the decision. Now we have to take decisions whether we should buy or not. So what we'll do, we'll write down if bracket open. So what is the decision? If intrinsic value, if it is greater than, okay, current price, nothing but the current market price. If this intrinsic value is greater than current market price, what we'll do, we'll buy, comma, if not, we will do sell. And based on that, you need to take the decision. There is, okay, some formula is missed. Okay, a double inverted comma is missed. So what we should do, sell. Okay, so this is how you should do a DCF model of Apple company stock, right? So this is how the final conclusions we have to take here based on the final analysis. So we calculated WACC, cost of debt, cost of equity, weights, everything. And finally, we got this result. Thank you.